Hello, and welcome to Beyond the Deal, the show where we go deeper than the numbers and we talk about all the tips and tricks that lead to success in life and business. Today, we've got an absolute banger of an episode. My guest is Alice Chen. She is a former lawyer who hated her life as a lawyer and became a serial entrepreneur with multiple successful exits under her belt. You're going to hear how she built a business exporting wine to China and how big that became. And you're going to hear about her current thesis of land development and how lucrative that is. And then at the end, she's going to give her exact morning routine that primes her for success. So without further ado, let's get into today's episode. Alice Chen, thanks so much for being here.
Thanks for having me, Michael.
All right, welcome to the show. So for our listeners who don't know anything about you, can you give yourself a very brief introduction? Tell us what you're doing right now.
Sure. So I'm a partner at Pender Hastings Capital. We are a real estate private equity firm with funds in both Canada and in the US. So I lead our US market. My background is in corporate law. So I practiced in mergers and acquisitions and securities law at a big law firm in Canada before leaving law to pursue becoming an entrepreneur. So it's hard to believe, but I've been an entrepreneur for 16 years. So I'm a serial founder across different industries, lots of experience in finance and fund management, really love investing myself. So here we are.
That's so cool. I think that is the perfect segue. In this podcast, we do talk a lot about what does it mean to leave the 9 to 5 and become an entrepreneur. So can you kind of tell us, you're working your job as a lawyer. Do you like it? Do you not like it? What is the impetus? What makes you decide to go strike it out on your own?
Yeah, so that's actually a long time ago. So that's 16 years ago. So I grew up in an Asian household where education is prioritized. So there was no question that I was going to university. And beyond that, I was going to some sort of professional school, right? So growing up, my parents approved these 5 professions. You can become a doctor, a lawyer, a dentist, an engineer, or an accountant. So, I picked one. I really love logic. I love persuasion. I love negotiating. I love speaking. And so going to law school was kind of a natural progression. But having said that, that's quite a long time ago. And I remember when I was practicing law, it's no different than an episode of Suits or something like that. Like you're a junior lawyer, Friday afternoon, the senior lawyer comes into your office and drops a bunch of files on your desk. And there goes your weekend. I'm a big traveler, so they often do that right before my big trip as well. So at one point I said, I appreciate all the skills I'm learning in the law firm as a lawyer. I learned how to do due diligence. I learned to read legal documents, how to structure deals, how to assess risk and liability, how to negotiate. But what I really wanted to do was something in business. So there was this kind of burning desire inside of me that wanted me to become an entrepreneur. But of course, I didn't quite know what that meant because remember my 5 prescribed, approved professions. And so beyond that, I knew it was business I wanted to pursue, but I didn't know what that meant. And so I followed my passion. So my first business was an international trade. It was actually, I was really into wine at that time. So my first business was actually starting an export agency and creating a 2-sided marketplace to connect Canadian wine producers with foreign buyers. And that went really well because I was working on something I was passionate about. So every day, I never felt like I worked a day in my life again after I left my job. I often tell that story. Yeah, so it was a really cool situation where I combined what was really hot in the market with what I was really good at and what I was passionate about. So you might have heard this word. It's called ikigai. So it's a Japanese word that tells you that when you have all these things intersecting, then that's kind of your life purpose. So that was my first taste in business. Within 3 years of founding my first business, after leaving the legal profession, I achieved the status of a top 40 under 40 by Business in Vancouver. We exported about, I think, 16% of the national dollar value of wine to the Greater China region. Yeah, so it went really big, scaled really fast. So that was, a cool experience, got some confidence as a young entrepreneur, and then went on to go back into mergers and acquisitions, rent a boutique. That was my second business that was acquired by PricewaterhouseCoopers, PwC, in Vancouver. And then from there, I did different things. And throughout this 16-year journey, I started to invest my own capital as well. So just really fell in love with investing, and especially investing in alternatives. So I built most of my personal net worth through investing in private equity or passive investing. So I don't do any active real estate. I try not to do anything like that. I don't like tenants, toilets, renovations. So I don't do any of the heavy lifting, that kind of stuff. It's just not really my lane. So I think in business, you just have to know what you're good at and what you're not good at, and be very brutally honest with yourself. And that's kind of how you find your place.
So much gold to unpack there. So, wow. First of all, congrats, 40 under 40. That's such an honor. And you said the 16% of all the wine imports?
Exports. Yeah, that
okay.
can. Yeah.
From Canada to China.
Yes.
That's incredible. I want to actually revisit that a little bit just for my own personal curiosity. So how big did that company become? Did you have a bunch of employees? How big did you scale it to?
Yeah, so that was a team of about 15 people. And what's interesting about that business, or about business generally in my 16-year journey, is that sometimes you just can't predict what would happen. And sometimes it's factors outside of you. So macroeconomic factors. And I know a lot of the founders are dealing with this right now because of the tariffs that's been placed. So back then, what I was confronted with was actually Chinese government policies. So China actually runs its country like a corporation. So every 5 years, it sets a corporate agenda for the country. So when I was doing the wine export business, this is circa 2010 or so, they really wanted to, like around 2010, 2013, 2014, they really wanted capital to outflow. So they were very much encouraging their business leaders to go and acquire businesses overseas. So during that period, we actually saw a lot of acquisitions of American businesses, so including hotels, like the Waldorf Hotel in New York, for example, the AMC theaters. There's a lot of businesses that were acquired by Chinese companies. But then because they run it based on their mandates, the mandates change. So the next 5 years, they shut it down. So then all of a sudden, it's like the people that are buying the wine from me, a lot of these high net worth Chinese family offices, they then turned to me and said, look, we love doing business with you. You're a kick-ass, but we can't buy luxury goods from a foreign country anymore, because that's in contravention of what the government was advocating or mandating at the time. So then at that point, there was a window where, the government of China was actually encouraging the capital outflow for buying businesses. So then my second business was formed based on that demand. So the first business sort of didn't exit. I made good money from it, but the whole team kind of morphed into the second business just by responding to the market. So I think there's a lesson to be learned here for anyone that's kind of struggling right now, dealing with the uncertainties. It's just that, you have to kind of stay fluid, kind of stay like water, and just kind of morph into the different shapes and forms that you find yourself in. And so I think by staying very adaptable has been the way that I have been able to make multiple pivots in my business career and have been successful because of it.
Wow. You almost answered my next question before I could even ask. So thank you for the wonderful insight there. Hey, really quick, I hope you're enjoying this episode. I just wanted to stop for a second and thank our sponsor, which is me. Nimble Capital Group is my boutique investment firm where we help passive investors access deals built for cash flow, equity growth, and powerful tax benefits. And if you think you've ever wanted to learn how to raise capital and become a GP yourself, I coach a select group of students each month, most of whom will raise over $500,000 within their first 60 days. So check the show notes in the description below to book a call. I'll see you there. Now, taking us to the current moment, you mentioned that you don't do any active investing. You are a passive investor. And I think that a lot of our listenership are either people who are real estate GPs like myself, or are interested in being passive investors into real estate syndications. So can you tell us a little bit about what you're doing now, how you're structuring deals, and where the current version of Alice Chen is going?
Sure. Yeah. So the current version of Alice Chen runs a land development thesis fund in the United States. And we are the capital partners to best-in-class land developers in the country that turn raw land into buildable lots for national home builders. So what does that mean? Land development is two parts. It's land entitlement as well as horizontal development. So land entitlement is all the paperwork. You got to get the zoning, permits, all that kind of paperwork stuff, working with the municipalities to get that. And then once you have that, then on paper, you have buildable land, but then it's just still raw land, right, in its physical form. So you got to have what's called the horizontal developers to come in and actually put roads and infrastructure onto the land. So going from raw land into finished pads. And then the home builders, whether they're national home builders, a lot of them public companies, or regional home builders, they can come in and start building vertically. So they build the houses or they build towers. So we are a private equity firm that deploys capital into these land development projects. So that's what I'm up to right now.
Got it. And yeah, I mean, the power of entitlement is significant. We own about 10 acres that we entitled, and it almost doubled in value just in that moment. You know,
Yes.
that the government, it was now buildable. It's
Yeah.
a business model. So you're running this fund. Are you accepting retail LPs, family office LPs? Is it mostly your own capital? Where are you getting the capital for this fund?
Yeah, so we welcome LPs, their accredited investor status. So, you know, it could be a high net worth individual, it could be a W-2 person, it could be a family office, it could be institutional money. Yeah, so our fund is currently open.
Okay. And what kind of returns can investors into this fund expect? How does raw land, for example, differ from a value add multifamily?
Yeah, so it's interesting because as a firm, we spent a lot of time studying different strategies across different geographies before focusing on something, right? So for us, my business partner, James, he actually spent the entire year of 2022 in Texas studying multifamily value add strategy. So of course, because of the interest rate hike towards the second half of the year, we didn't go into that realm. And I'm starting to hear some news of recovery from the multifamily syndications now. So some of the deals obviously, went underwater, but some of the deals are now reviving, which I'm glad to hear. But as a firm, we want to lock into a strategy that is big enough of a problem so that we can continue to work on solving that problem, right? Because you want sustainable demand for the solution of that problem. And so the solution being our capital and also expertise. At the same time, we want to look for something that's differentiated, so something that's interesting. So land development is actually an area that's not widely known because it has high barrier to entry. So if you want to become a land developer, typically people get into that from a construction background, from developing their own, properties, maybe developing just a smaller number of single family homes. It could be from developing multifamily. But the reason why there's quite a barrier to entry is in the capital stack of a project. Let's say if it's a land development project that's worth 10 million, right? You need to have the acquisition and development loan on that project. So call it 7.5 million, typically about 75%. The land developer has to actually personally guarantee this loan. So that kind of crowds out a lot of people that don't have that kind of net worth to guarantee the loan. So our fund actually invests in the equity piece of that project. And Michael, I wanted to give you a little bit more background about exactly what we're investing in. So typically when a home builder, so let's say D.R. Horton, America's number one home builder in the country. They are a public company. They are at $35 billion in annual revenue, so a huge company. So at that scale, take a guess. How many homes, single family homes, can they build in a year?
30,000.
Okay, well, so for me, maybe I'm a little bit too optimistic. I would have thought that at $35 billion in annual revenue, you can build much more than 30,000, but in reality, they build about 90,000, 100,000 homes. Yeah, so you're maybe not far, and yeah, so exactly. And so we have currently a 4.8 million deficit in single family homes, right? So there's a big supply gap. And the reason why this gap is so big is because, there's underbuild. Like since the financial crisis of 2010, there's been basically a slowdown, and also consistently, like the home builders have been underbuilding all this time. And so, number one, D.R. Horton, they're building about 90,000 homes a year. Second place, Lennar, drops down to 70,000. I think the third place was Pulte or something like that, drops down to 50,000. So I have a list of 50 top home builders in the US. It will take them, and I've done the math, it will take them about 10 years to actually catch up to that supply gap. And the supply gap is still growing,
Yeah.
Yeah, exactly. So if the home builder company wants to build homes, let's say if they want to pursue building a master community of 1,000 homes, what do they need first? They need lots, right? They need to actually have lots to build on. So they need like 1,000 lots for 1,000 homes. So then your next question may be, well, why don't they have a division just working on land development? How come they don't do that themselves? And it's interesting, it's because while you're doing the land entitlement or horizontal development, you need to own the land, and ownership of the land actually shows up as a liability on the financials. So for a public company, that's a problem. So it makes your stock price disfavorable, right? And so they don't like to do that part themselves, and that's why they outsource the land development to third-party company. And so our operating partners are people that have been in construction or development, and they just happen to kind of come across this opportunity. So it's a little bit of a if you know kind of situation where you discover, wow, there's this massive demand, but there's an asymmetry in terms of the supply. Like there's not that many land developers that do pure play land development that supply to the home builders. And so it's an amazing area. And before the land developer would begin the job, they actually get an invitation to do the job or invitation to participate in the bid from the home builder. So it's not a case of randomly, or hoping that, okay, if we do work on this piece of land, there's going to be an exit. But it's actually, an exit that's already built in, driven by the home builder. So you're approached by a home builder who says, okay, buy this piece of land from us. We're going to pay you, call it $30,000. You buy it from us at $30,000 a lot. But once you're done your horizontal development, we'll buy it back from you at $70,000 a lot. So the profit at the outset on day one. The profit, it's papered, you have an exit that's built in. So that's what we love about this model.
And what's the typical time frame for a land development?
Yeah, so first, it depends on the size of the project, but our fund mandates that we don't invest in projects longer than 30 months, so 24 to 30 months. And that's typically, community of 500 homes to 1,000 homes at that scale. And you asked about the returns. Yeah, so it's a very profitable space, and we are looking at a targeted 25 to 27% IRR.
Got it. On a 24 to like a 2 to 3 year hold, basically.
Yes. Yeah. So let's say if we wrap up the fund in 3 years, then your equity multiple is 1.75 to 1.97.
Wow, that's fantastic. And
yeah,
I assume there's no cash flow or distributions in the meantime?
No, because we don't exit until we actually finish the project and we sell the project.
Right. And so for any of our listeners out there who maybe come from the real estate world, there's so many different ways to slice this cookie. If you're a multifamily person looking for cash flow and tax depreciation, maybe this isn't for you. But if you're an equity play kind of person looking to almost double your money in 2 to 3 years, what a fantastic opportunity here.
Yeah.
What have been some of your major challenges stepping into this land acquisition space?
Well, I think the current climate isn't great. The current news cycle is not great for home building. So I think it rocks the investor psychology. So if you're someone that's digesting a lot of news, you might be seeing stats like Lennar's publishing data that shows that, okay, they're adjusting their margin expectations. So they are maybe delivering less homes than expected and things like that. And so right now, it's challenging because we're going against the headlines, against the current climate. But I think when you're investing in something, you want to look at the fundamental problem. And the fundamental problem being that there's a huge deficit in housing supply. So then you ask yourself, is this problem a sustained problem that needs solution? And of course, this is one of those situations, right? And then so from there, you have to look at the time horizon, because we are a forward-looking business, like we're deploying into projects that don't exit until 2 or 3 years. So what is maybe the headlines today isn't necessarily applicable in 3 years. So in the stock market, they say buying the dip and then harvest and recovery. So same thing here.
Absolutely. As a land developer myself, I know that this is a fantastic time and everything works on a much longer outlook than people are usually considering. Just out of personal curiosity, I don't know if you have an opinion on this or not. So I'm a multifamily developer, right? And most of what you're doing would be plots for single family homes. Do you have an opinion on maybe the future of where single family development relates to multifamily, relates to mobile home parks. I mean, where do you see things going in the next few years?
I see a trend towards BTR, so build to rent. So that's basically horizontal multifamily. And so I think there's a lot of people in that space right now. And it's just different tiers, right? So people need homes, like that's no question. So whether it's a home inside a multifamily building or it's a home that they would rather to see attached from their neighbors, even though it might be quite small or smaller than maybe they would have liked. Some people prefer that. A lot of people prefer that, right? So then there's also people that prefer that, but then don't want to own. They want to rent. So there's different permutations of this horizontal multifamily as a trend that I'm seeing.
I couldn't agree more. In all the markets that we are in, so much built to rent just popping up everywhere. And for our audience who is unfamiliar, these would be like really small single family homes spaced very close together, which are not for sale. The whole community is owned by one entity and is entirely for rent. So very, very interesting business model as well. Okay, so what do you do on a daily basis right now? If you're managing all of this fund and all of this stress, how are you staying sane? And how are you managing your day in these current economic times?
Yeah, so I'm actually not a very stressed out person, and I didn't start out that way. I was super stressed out when I was working in the law firm. And I think over the years, it's just incorporating a lot of good practices as daily habits. So, for example, I do a lot of yoga. I work out with a trainer twice a week. I pursue my hobbies, like I go travel or I go for walks in nature. So I think dedicating time to yourself is very important in terms of keeping yourself sane and just dedicating time for wellness. Because if you're not well, like you're the vessel for creation, right? Or a vessel for performance. But if you're not well, how can you expect good performance to come from yourself, right? So same thing, like if you have all these programs on your smartphone, but if your phone is outdated, right? It's on, I don't know, we're now at iPhone 16, but if you're running an iPhone 8, you're not going to be able to contain all these different programs. So I think that the software, soft content has to work with the updated hardware, right? So I think we all have kind of human operating systems, so we have to constantly update that. So I really prioritize making sure that I'm in the right performance state in order to get good performance out of myself, right? So it's daily habits like meditation. I mean, everyone has their own thing, but I do all these things I mentioned. I have habits, like for example, I forbid myself on logging onto social media, even though I get a lot of news from Instagram, but I just, won't let myself look at Instagram before noon because I think I work really well in the morning. So I want to preserve my brain state to be at a very high performing frequency. So, getting into social media, starting to read the news, that's all very negative, right? And in the morning, there's just different things I do to make sure that I'm starting the day right. And then I have afternoon practices and evening practices.
Okay, perfect. So I couldn't agree more. I actually have an app on my phone. I am not allowed to even open social media if it's not between the hours of 6:30 and 8:30 p.m. And I have to get all of my social media completely done in those hours for the entire day. So if anybody's been reaching out to me on social media, I apologize. It's not your fault.
Nice.
I swear I'm not looking.
Nice.
And I absolutely love the morning routine thing. Have you ever read the book Miracle Morning by Hal Elrod?
Yeah, I read that many years ago. Yeah. Very good book.
So what are you doing right now to get yourself in the prime mindset for success in the mornings?
Actually, I have a scorecard, so I'm looking at it right in front of me, and I actually document my scorecard and see how I'm doing from week to week. So I think first in the morning, I wake up and I do gratitude practice. So I think of 3 things I'm grateful for. So these could be like super simple things, like waking up to, I'm very fortunate. So I wake up to the sounds of bird chirping. So that's something that's so simple and I can always take for granted and ignore it. But just something like that, something very small that I can feel grateful for, I think is very important to wake up with gratitude. And then I'm doing something called the lofty questions. So this is an exercise that helps you transform your identity. So for example, whatever you're working on, if you want to become a certain way, you have to first buy into the identity or internalize the identity of yourself. So for example, let's say if I used to have bad eating habits, but now I want to have a certain type of wellness or fitness goals, and I want to become someone that doesn't binge on sugar or carbs, then I have a question. I would ask myself, well, why do I always make the best food choices for my body? And I have these questions, lofty questions, and they change every quarter. And I actually record this on my voice memo app. And then I ask all these questions in different areas of life that helps me transform my understanding of myself. So in order to achieve something you haven't achieved, you have to first actually become that identity. This lofty questions, and you can Google this, I didn't invent this, help you transform your understanding of self. So I'm experimenting with that this year. I have a Lumen device that measures carb versus fat burn. So I measure that first thing in the morning. I do my supplementation, take probiotics and this and that. So that's first thing in the morning, I do some sort of movement. So either I work out my trainer, sometimes I'll do some yoga, some stretching. And then I listen to some type of podcast or some type of like motivational something. It could be like a Tony Robbins priming exercise. So I call that morning energy conditioning, like energetic conditioning. So I'm conditioning my mind for the better frequency, And then before I start work at my desk, I take 5 minutes, even if it's just 5 minutes, to prioritize my day. Like I write down the 3 things that could move the needle. So if I did nothing else for today, accomplish nothing else, those 3 things need to be done, and I stick to them. So those are my morning routines.
Absolutely fantastic. I hope everybody listening has a pen and paper and wrote all that down. By the way, Lumen, very, very cool device. I've actually been to their offices in Tel Aviv and met their CEO.
Wow. Okay.
Really, really cool stuff they're working on there. And the lofty questions. Wow, I've never heard of that before, but I'm absolutely going to start incorporating that into my life. So really quick before we go, thank you so much for being here, Alice. Please tell the people where they can find out more about you. And of course, we'll include all the links in the show notes.
Sure. You can connect with me or look at my materials at my website. It's alicechencompanies.com. Chen spelled C-H-E-N. And I look forward to hearing from you.
All right. Thanks so much for being here.
Thank you, Michael.
That's a wrap for today's episode of Beyond the Deal. I hope you got some valuable insights that you can apply to your own investing journey. Now, if you've enjoyed this conversation, do me a favor, hit that follow button, leave a review, and share this episode with somebody who you think could benefit from it. It really helps the show grow and bring on even more incredible guests. If you want to go deeper, make sure to follow me on your socials. You can find the links in the show notes in the description below. Thanks for tuning in, and I'll catch you next time. Until then, keep going beyond the deal.